A report from the Auditor General's office indicates that Post Bank was running out of capital, with its capitalization standing at only 98 billion as of December 2022, yet the Financial Institutions Instrument of 2022 requires an entity that operates as a bank to have a minimum paid-up capital of 120 billion invested in liquid assets as the central bank may approve. According to the World Bank Group's enterprise surveys, the Uganda's banking penetration is among the lowest in sub-Saharan Africa, meaning that small and medium enterprises in Uganda face particularly constrained access to finance. To minimize this, therefore, the Honorable Evelyn Anite, the Minister of State for Privatization, revealed that government is considering recapitalizing the Post Bank to enable it to make money available to sectors like manufacturing, agriculture at low interest rates.
What I am trying to emphasize here is that we have committed as government to give Post Bank more money. We resolved that the dividends that they declared to us this afternoon, they recapitalize it. And we also did resolve that we're going to get for them additional money such that their share capital of 150 is achieved. So that is what we resolved, and we're very, very happy that government was able to take this bold step of making sure that the bank is not underfunded and it meets its financial obligations, therefore give efficient service to the citizens.
Basing on the data from the bank by 2022, it realized growth in customer deposits by 36%, resulting in a net profit of 15.1 billion, while the total assets grew by 21.3% from 745 billion in 2021 to 946.6 billion in 2022. Julius Kaketo, the managing director of Post Bank, says that much as they are recording growth, they have faced challenges related to capital acquisition and rampant default rates.
The other challenge has been resolved today, has been around capital. Not that we don't have enough capital, but because the regulation, the laws have changed, and we need to increase capital to help us compete even better. That's another challenge. And of course, there's another challenge that is faced again by the industry, which is the high default rate. And that creates a lot of other challenges in the industry, including the interest rates. The general default rate in Uganda is always between 4 to 5%. So on average, every 100 shillings that you give out, 4 or 5 will not return. So it's really a very big challenge. And it is our job to support customers either through a lot of financial literacy, a lot of information, creating awareness, and monitoring and follow-up to make sure that the ones who lend money can actually pay.
The bank further recorded a total income growth from 144.5 billion in 2021 to 159.2 billion in 2022. The bank's shareholder equity as well grew from 117 billion in 2021 to 135.6 billion in 2022. The Honorable Evelyn Anite says that government will continue to invest in the banking industry and make sure that the state-owned commercial banks reduce lending rates for Ugandans who are interested in starting up businesses.
We have to continue supporting them, make them stand on their feet so that they make money available to our manufacturers, because our focus is in agribusiness, value addition, manufacturing. Like my president will say, our president will say that we don't care about the casino owners, but our focus really is the manufacturers. How do we address the issue of capital to the manufacturers? And we can only do that if we give more money to Post Bank, and Post Bank drops its interest rates. Other development countries like Germany, they will give it to you at 1%, 2%. That's where we want to go.
The endeavours of Post Bank came at a time when the Minister of Finance is appealing to the Parliament's Finance Committee to approve $217.330 billion for the recapitalization of the Bank of Uganda. However, the MPs wondered why government should shoulder the burden of recapitalizing the central bank, yet the entity charges government highly for the money it borrows. Pedson Mumbere, Smart24 TV, Business Today.